War or no war, rain or shine, if there's one sector that remains strong even in uncertain conditions, it is healthcare, especially healthcare in the US. With many tailwinds driving growth in this sector in the States, there is a great opportunity for Indian healthcare BPOs to fill in for important operational and technological efficiency to drive the surge. Two Indian listed companies are particularly well positioned to benefit from industry tailwinds and reasonable valuations. To find out which are the stocks and what are our views on them, stay with me, Manav Medewala, till the end of this video. The US is the world's top spender on healthcare at over 5.3 trillion, with spends rising 7.2% in 2024, largely driven by heightened demand for healthcare services. Some of the tailwinds driving the surge in demand in the US are growth in population of the 65 plus age group, rise in chronic diseases, shift to outcome-linked healthcare models, need for personalization and 24/7 access, specialized remote care, delivery models, favorable policy and insurance benefits. But there are challenges as well, such as talent shortage, rising cost of care, payer-provider friction, regulatory and revenue pressures, economic insensitivity, cybersecurity risks. To counter these, healthcare BPOs can provide domain expertise, scalable technology, and operational efficiency. Some of the key functional areas they can fill in are as follows: medical billing, medical coding, claim processing, customer support, AI nurse assist, value-based care, Gen AI platforms, and data analytics. Regulatory affairs. The US healthcare market is made up of two participants, payers and providers. While payers finance the cost of healthcare services for insured members through health insurance plan, providers comprise licensed individuals and facilities that deliver or support care, including doctors, clinics, hospital, and durable equipment suppliers. In this dynamic space, there are two listed Indian healthcare BPO companies, one operating in the payer side of things and the other in the provider side of things. Both are well placed to offer cost efficiency, compliance, and digital transformation while supporting long-term industry growth. First up on our radar is Sagility, a pure-play US healthcare BPO focused on payer-side services. With deep domain expertise, cost-efficient, India-based delivery, and margin expansion potential, Sagility is poised for earnings growth. Given its strong positioning, structural industry tailwinds, and reasonable valuation, the stock offers an attractive risk-reward, supporting a buy view. We expect revenue, EBIT, PAT for FY26 to 28 to grow at 16.4, 18.9 and 20%, valuing the company at 18 times price to earnings multiple on FY28 EPS of 2.9, arriving at a target price of 53. The other stock is IKS, a technology-led healthcare outsourcing platform focused on US providers, benefiting from strong structural tailwinds such as rising outsourcing demand and growing adoption of AI-driven workflows. IKS is expected to clock 19% revenue CAGR, with EBITDA margins stabilizing around 35% and PAT reaching 1,085 crores by FY28. We maintain a buy rating with a target price of Rs 2020, 32 times FY28 EPS of 63.3, driven by margin expansion, earnings growth rate, and platform-led differentiation. While healthcare BPOs are all primed to buttress the surge of new age advances in healthcare, there are few risks to consider. First, slowdown in healthcare spending in the US or any unfavorable policy shifts. Second, pricing pressure arising from higher automation. Third, higher client concentration or consolidation risks. Fourth, risk related to rapid technological changes or obsolescence. So that was our snapshot of this emerging new subsector in the market. With the US-India trade agreement on the radar, do you think that there is scope for even more growth in these two companies in this niche space? Share your views in the comment section. You can now access our calls, research, reports, and even the latest research videos in one portal, the Mirae Asset Sharekhan Research Center. To access our videos and research reports in real time, join our WhatsApp channel today. The link is in the description. Thank you for watching, and we will be back with a new trending sector.
Investment in securities market is subject to market risk. Read all related documents carefully before investing.